So everyone wants to know the same thing. Have we hit the bottom or the price is still sliding? April 2026 gave us one of the most interesting markets we've seen in a while. Sales are up, listings are down, but buyers are still not overpaying. So let's break down what's really happening in the GTA market today. Hi everyone, Fuad Abbasov here, a broker with Right at Home Realty. So let's talk about the April 2026 real estate market, because honestly, this month is a little confusing if you only look at the headlines. You might hear sales are up, then someone else says prices are down, then another person says buyers are back. And then you look at some listings sitting on the market for weeks and think, back where? So what is actually happening? The simple answer is this: the GTA real estate market is waking up, but it's not running yet. It is stretching, looking around, checking the weather, checking mortgage rates, and deciding whether it wants to get out of bed. In April, GTA sales were up about 7% compared to last year. That means more people bought homes this April than in April of 2025. At the same time, new listings were down about 9.3%, so we had more buyers making moves, but fewer new homes coming to the market. Normally, when sales go up and listings go down, we start talking about a tighter market. And yes, that is starting to happen in some pockets, but here's the interesting part. Even with that tighter feeling, prices were still lower than last year. The average GTA selling price was around $1,052,000, down about 4.9% compared to April of 2025. So this is not the crazy pandemic market where buyers were throwing offers at anything with a roof. This is a much more careful market. Buyers are active, but they are very picky. They're looking, comparing, calculating, and negotiating. And sellers who are priced properly are getting attention. Sellers who are testing the market with fantasy numbers are usually getting silence. So let's start with detached homes, because that is still the category many people watch first. Detached homes are still the most expensive and emotional part of the market. Everyone wants the driveway, the backyard, the space, the freedom, but not everyone wants the payment that comes with it. Don't forget to subscribe for honest monthly GTA stats without the hype. I keep it transparent so you can make smarter decisions. Across TREP, detached homes averaged about 1.37 million in April. In Toronto, detached homes were around 1.67 million, while in the 905 area they were closer to 1.26 million. But the detached market is not behaving the same everywhere. Some areas are holding better, some are down quite a bit. For example, Vaughan detached homes averaged about 1.56 million in April, down over 14% year over year. Markham was also down, Newmarket was down, Innisfil saw one of the bigger drops, but Oakville was actually up year over year. So when people ask me, is the market going up or down? I always say, which market? Because the GTA is not only one market, right? Vaughan is not Oakville, Newmarket is not Toronto, Barrie is not Richmond Hill. Even within the same city, one neighborhood can be moving and another one can be completely quiet. Detached homes are selling, but buyers are not giving sellers a blank check anymore. They want value, they want condition, they want location. And if something is overpriced, they move on very quickly. Now, semi-detached homes are actually one of the more interesting categories right now. Why? Because semis sit in that sweet spot for a lot of buyers. A fully detached home may be too expensive, especially in Toronto, but a condo may not offer enough space. So a semi-detached becomes the compromise. You still get a house, you still get some land, you usually get a basement, and the price is not as painful as detached. In April, semi-detached homes averaged just over 1 million across TREP. In Toronto, good semis under 2 million are still getting serious attention. In some neighborhoods, they can still attract multiple offers if the price is sharp. This is where strategy matters. A well-presented semi priced properly can still create competition, but if the seller tries to list too high just because their neighbor got a crazy number in 2021, buyers are not playing that game anymore. Townhomes are also doing well because they're practical, right? So for many young families, townhomes are the realistic option. They want more space than a condo, but detached homes may be out of reach. Townhomes give them bedrooms, parking, a bit more privacy, and often a lower price point compared to detached or semi-detached homes. Let's say in April, townhomes continue to attract buyers, especially in the 905 area, places where people can still find a family-friendly layout, a garage, and a decent space under the price of a detached home are getting attention. This is also why I think townhomes will continue to be important. Affordability is still a big problem, and buyers are adjusting. They're not always buying their dream home right away, many are buying the next realistic step. Now, let's talk about condos, because condos are probably the most misunderstood part of the market right now. People say condos are terrible, but that is too general. The condo market is definitely softer, especially small investor-style units. Bachelors, tiny one-bedrooms, micro-condos, units with awkward layouts, high maintenance fees, or too much competition in the building. Those are struggling. But larger condos are a different story. 2-bedroom units, 3-bedroom units, good layouts, good buildings, good locations, those still have buyers. Not every condo buyer is an investor, right? So some people actually want to live in the unit. They need space, they need parking, they want access to transit, and do not want the price tag of a house. So I would not say condos are dead. I would say the lazy condo market is dead. The days of buying any small pre-construction box and expecting it to magically go up are not the same anymore. Buyers are smarter now. They ask more questions. How much is maintenance? How many units are for sale in the building? Is there a locker? Is there parking? What are the rental numbers? What is the reserve fund like? Is the floor plan actually usable? And honestly, they should be asking those questions. Now, new construction is another major topic, and that market is still trying to recover. For a while, pre-construction was almost treated like an automatic investment. People bought on floor plans, waited a few years, and expected profit. But today's buyer is different. They're not just walking into a sales center and buying because of nice brochures and a cappuccino machine. They want incentives, they want better deposit structures, they want realistic pricing, they want to know if the project makes sense. And they're looking beyond just condos. Now, we cannot talk about the real estate market without talking about mortgages. Mortgage rates are still one of the biggest reasons buyers are cautious. Yes, borrowing costs are better than they were at the peak, but they're still not cheap. Many buyers are doing the math and realizing that even if prices are lower, monthly payments are still unfortunately heavy. And there's another issue: mortgage renewals. A lot of homeowners are renewing at higher rates than they had before. Some people who looked in some years ago at very low rates are now facing a very different payment. That does not mean everyone is in trouble, but it does create a lot of pressure. CMHC recently reported that Canada's residential mortgage debt is now over 2.4 trillion. Delinquencies are still historically low, but they are rising. Ontario has seen more stress, and some areas like Toronto and Barrie have seen noticeable increases. Again, this does not mean the sky is falling, but it does explain why some sellers are more motivated, why some deals are more fragile, and why buyers are being extra careful with financing. And that brings me to another important point: failed deals. There are a lot of them actually now. We're seeing more conditional offers again, financing conditions, inspection conditions, sale of buyer's property conditions. All of that is back. During the crazy market, buyers were removing conditions just to compete. Today, many buyers want protection, like it's supposed to be. And honestly, that is not a bad thing. The problem is that some deals are falling apart because buyers are nervous, financing does not work, or the buyer needs to sell their own home first and cannot get the price they expected. That is why preparation matters. If you're buying, get pre-approved properly. Not just a quick online calculator. Speak with a mortgage professional. Understand your budget, understand closing costs, and know what your monthly payment actually will look like. And if you're selling, Understand your buyer. You need to put yourself in their shoes. The highest offer is not always the best offer if that buyer cannot close. So, what does all of this mean for sellers now? It means this is not the market for ego pricing. If you're serious about selling, price it properly. Prepare the home well and understand your competition. See, buyers will pay for good homes, but they will not overpay just because you want a certain number. If your home is clean, well presented, in a good location and priced correctly, you can still do very well. But if you list high just to test the market, you may end up sitting, reducing and chasing the market down. And what does it mean for buyers? It means you still have opportunity, but maybe not everywhere and maybe not for long. See, if sales continue to improve and listings continue to drop, certain pockets could become more competitive. We're already seeing well-priced freehold homes attract attention. So if, for example, you're a very serious buyer today, this is the time to be prepared, not the time to casually browse and hope the perfect deal falls into your lap. The market is not hot, but it is not healthier than it was. Buyers are coming back slowly, sellers are adjusting slowly, prices are still below last year, but some areas may be getting closer to a bottom. This is a market where headlines can mislead you. One article says prices are down, another article says prices are up, another says bidding wars are back, and all of them can be true at the same time depending on the property type, price point, and definitely location. That is why local information matters. So, before you make a decision, look at the real numbers in your specific area.
If you'd like to receive your own personalized sales report about home sales in your neighborhood, please call me at 647-801-3401 or email me at sold@fuadhomes.com. Thanks for watching and see you next month.